we've done pretty well in 15 years. We just had the 15th anniversary of the white paper, right? October 31st. I always loved the fact that the white paper, which was completed obviously before October 31st, was released on Halloween, right? The day before Dia de los Muertos. And I just find that ironic. I mean, Satoshi had a sense of humor, right? And what I think is amazing, in 15 years, we've gone from zero, no adoption of the technology, no one even knew what the technology was, to your point, we hit 3 trillion. Today we're, $1.5 trillion. $1.5 trillion of value from a technology that is in its infancy. I talk about this, there's the capability of something and there's the potential of something. So what is the capability of most 15-year-olds? It's not very high. I mean, we all love them. They're our kids. They're nice. And some of them are wunderkinds, but the average 15-year-old doesn't have a lot of capability. Their potential is amazing, okay? I show this picture of an 11-year-old LeBron James all the time. And I say, what would you pay for this guy's future earnings? Oh, you can't say that. That's like, I'm not saying you're buying the person. I'm saying, how much would you pay for this kid's future earnings? And at 11 years old, LeBron didn't look like anybody special. He looked like any other 11-year-old. He wasn't even that big. And people are saying, I'm not paying for that kid. Oh, you missed a big, I would have paid a decent amount for that. But the capability of Bitcoin today and other assets in the ecosystem is solid. It's good. But the potential, unbelievable. I mean, Bitcoin will become the global asset settlement layer, right? Every asset in the world will ultimately settle down onto Bitcoin. I believe that, right? Now, does that mean there won't be any other tokens? No. Does that mean there won't be any other protocols? No. Right? We have 5-ish, 6, 7 protocols that matter in the internet, and we'll probably have similar numbers in the third generation of the internet, the spatial web. Actually, I met these interesting guys last week, and they wrote a book called The Spatial Web. And if you haven't read it, you should read it. And it's amazing. The difference between Web 2 and Web 3 is this idea of 3 dimensions and spatial connections and how networks work. And that's why it's so powerful, because exponential growth, like the 4 of us right here in this block, it's not 4 connections. It's my connection to Johnny, my connection to Mario, my connection to Abs, Abs to Johnny, Abs to Mario, Abs. So there's multiples of, it's an exponential growth. I mean, you can't blow it up, but in 2001, Amazon stock went down 94%.
That's right.
Went from $100 down to $6. Yep. Went down 94%. Now, here's the crazy thing. Amazon is a great analogy, because Amazon is a infrastructure. It's a technology. It's a network, right? Amazon, what do they make? They don't make anything. They're not a company the way we think of companies. They don't make widgets. They take 46 to 51% of the revenue that you as a seller sell on their platform. Just let that sink in for a second. So if you sell something for $2, they get $1 of it.
That's right.
For being the network that connects buyers and sellers. They are a search engine.
They're the
And the stock went down 94%. Here's the thing. It's been public for 27 years.
Yep.
Every single year, including this year, all 27, there's been a double-digit drawdown. The average is 31%, meaning on average, every year for 27 years, you lost a third of your money. When was the right time to sell? That would be never. Who bought it 27 years ago and holds to today?
Nobody.
There's 5 people in the whole world.
Yeah.
Jeff, mom, dad, ex-wife, and Bill Miller.
Yep.
Bill Miller, legendary investor, okay, big Bitcoiner. His cost in Amazon is 7 cents.
Unbelievable.
7 cents. He's never sold a share.
Yeah.
And because he believed in the technology. And the same thing is, we are 2024, right, which hasn't happened yet, is the beginning of the cycle that I've been talking about forever, 54 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, and 2024 with the truth net,
Currency.
okay, the Web 3, the internet of blockchains. That's the beginning.
Mm-hmm.
And if you go back to that 1998 chart, right, that was halfway through the beginning, right? 1996 was the internet. 2000, 4 years later, there's a bust.
Yep.
1958, there was a bust. 1972, there was a bust. You had a 4-year period. And then there's a bust. And in that bust, there was a cover story about the internet being dead. And Paul Krugman said it'll never be more important than a fax machine. And there was the picture of the little sock puppet from pets.com run over with tire tracks. And Mark Andreessen, right, the guy who invented the modern internet, because he invented the browser, which made it, you didn't have to be a tech geek to connect to the internet. He said all these ideas were right. They were just early. Now, early is the euphemism for wrong, right? You're just wrong. And ultimately, all of these ideas are going to be right. And everything we have is going to be tokenized. Everything we have is going to be settled on blockchains. Everything we do is going to be using micropayments of cryptocurrencies, all of it, but not tomorrow. And that's why it's such an exciting time to be an investor. And every time there's a correction, the right answer is not to run away, but to buy more.
Yes.
And if you don't know what an S-curve is, get the book, The Great Boom Ahead, this weekend and read it. It's an easy read. And the guy who wrote it, I like him. He's an interesting guy. All the books that came after it, they're not as great. Harry Dent. But this book, The Great Boom Ahead, is amazing, and it describes how an S-curve works. But what's cool about the chart that Johnny just showed is that first wave, that yellow wave, Tim Draper, who I think we'll talk about later, Tim calls it the IS curve. So you get this little I, this little mania around every new innovation, and then it peaks and it crashes, and then we get what's called the trough of disillusionment. And everybody's like, oh, down in the dumps, and oh my God, it's never going to work, it's never going to happen. And then suddenly, it just starts to ramp. And when you hit that knee of the curve, when you get from the early adopters to the middle majority, it takes 10 years to go through the first phase, right? To get the first 10%. That's a long time. 10 years is a long time. And you're just waiting and you're waiting and you're waiting. And the problem is you FOMO'd in at the peak of the eye and you lost some money. And that sucks. But you got to be patient and you got to accumulate and you got to average down your cost. And because ultimately that slope, that upward slope of the blue line is going to happen. And what I love about this is you could use that not just for the singular technology, but for money, right? So for 5,000 years, gold has been money, right? Money is an asset that exists in the absence of a liability. Everything else that we think of as money is not money, it's currency. Currency is backed by debt, controlled by governments. It can be devalued at the stroke of a pen. And that's what happens to every currency in the history of mankind. They all get devalued down to zero. But gold, for 5,000 years, has stayed the same. A single ounce buys a fine person's suit. From a suit of armor to Cleopatra's time, to a zoot suit in the 20s, to Savile Row. You go to Savile Row today, you plop down the equivalent of an ounce of gold, $2,000. What are you going to get? You're going to get a fine person's suit. Same thing for 5,000 years. Now, the problem with gold is it's amazing, except for two things. If I had a bar here, right, and I wanted to break it into 4 pieces to send to y'all, I'm in okay shape for an old guy, but I could not break that bar of gold. I just couldn't do it. Even if I couldn't stuff it in my computer to send it to you. But I hit a few buttons and I can send you Bitcoin like that. And all the Bitcoin in the world could fit right here. Now, I don't have any on my phone. Don't SIM swap me. People have tried. Don't keep it here. But It's portable and it's divisible. So for the next 5,000 years, Bitcoin. And so what's happening is you got a reverse S curve of fiat. It's going like this. And you got the S curve of crypto going like this. But the problem is in that blue line, inside that nice smooth blue line is massive volatility. Bitcoin goes to 100 and then it crashes to 2. Oh my God, it's a fraud. It's going to 0. Then it goes to 1,000 and it crashes to 200. Oh my God, it's a fraud. It's going to 0. Then it goes to 10,000 and crashes back to 1,000. Where's it today? It's not 0. And all that volatility, if you zoom out, if you just step back and don't think about the days, don't think about the hours, don't think about the speculative booms, think about the long term. We've gone from 0 to almost 800 billion in 15 years. It's fucking awesome.
As we wrap up, it's clear that the journey of Bitcoin and cryptocurrencies is far from over. Mark Yusko's insights reveal a world of opportunity and growth still untapped in the crypto sphere. Whether you're a new investor or a seasoned one, now might be the perfect time to explore this dynamic market. Remember, the future of finance and technology is unfolding right now, and you have the chance to be a part of it. If you found value in today's discussion, don't forget to like, subscribe, and share your thoughts in the comments below. See you in our next video, where we continue to explore the ever-evolving world of finance and technology. All the best.